I just wanted to, a little couple of minutes introduction as to why Michael and I are talking together today. And it comes from Forum turning, from my side, Forum turning 10 years, a year and a half or so ago, and thinking, okay, what does the next 10 years look like? And we've been very successful in putting together a group who look after each other and talk to each other and help each other. So in effect, Forum has worked very well internally, if you like. And I began to think, well, here we've now got this amazing group of people, and how do we come together as a group externally and become a force for good, if you like? And so there were 3 initiatives that I wanted to set up, all of which I have. The first was Forum's future, if you like, which was based around getting a much younger membership to join and to grow the membership from beneath the existing age group, if you like, and to bring that new and fresh intelligence to Forum, which we've achieved and continue so to do. The second ambition I had was to create a social enterprise, a charitable enterprise, and many of you have contributed, thank you so much, and know that we're right in the middle of it at the moment. And that the manifestation of that idea was and is Sporting Chance prize draw, which runs until March the 31st. So you have a fortnight to get involved if you've not already done so. And then the third initiative came about through talking to Michael, and Michael's work in the impact and sustainability field. And Michael's language to me about how he was looking, his mission, having been in this sector for many years, his mission now exclusively was to talk, if you like, to the unengaged, to engage the unengaged, is his phrase. And that really captured my imagination. And I thought, well, within Forum, there's a lot of people who would like to be engaged, who probably aren't engaged. And there are quite a lot of hurdles to understanding how you become engaged. And it was that conversation with Michael that made me realize that we could do something together. And hopefully from Michael's side, he too saw an opportunity. And we've created a joint venture, which is called Forum for Impact. And we've worked it through. We've talked a lot about it, what our objectives are. We've got a 3-year objective plan. And we are fortunate in that a conversation with the government of the Bahamas was presented to Michael. And that has resulted in us launching our first event this November in the Bahamas, to which you are all welcome to join us, on impact. And the Bahamas in particular, the relevance is that they are one of the early pioneers, if you like, of sustainability issues, particularly with regard to islands. And that's why we hope this is going to be a long and lasting partnership. And I noticed that we have Anthony Stewart from the Ministry of Tourism from the Bahamas on the call. So you're very welcome, Anthony. So there is my prelude and introduction to Michael, to myself, and Forum for Impact. Michael, good to see you there. We talk most days. So good to see you. Now, let's get on with the conversation. You often talk about the concept of the green fourth in impact. So I know what you're going to say, but can you expand on that, please, for our listeners today?
Yeah, sure. I think even though I come from the responsible investment space, which is more pension funds, asset managers, things like that, I do an awful lot of work in the impact space, you know, with families or for venture funds and individual investors and so on. And I really only have 3 sort of personal missions in life, right? One is to be a good husband and father, which is debatable whether I'm succeeding at that one. But the other one is to engage the unengaged, really, on sustainability. And what I mean by that is something that I always refer to as the green fourth. Have you ever seen The Purple Rose of Cairo or The Wolf of Wall Street, right? Both of those movies are great because in Purple Rose of Cairo, he actually comes through the screen right into the audience, one of the characters. In Wolf of Wall Street, at the very beginning, DiCaprio addresses the audience directly to the camera. And that's when they break this imaginary wall between the audience and the actors on stage. And ESG is a lot like that, right? Is that you've got business, investors, policymakers, governments on one side, general public. On the other side of this imaginary wall, you've got the ESG world, which seems like alchemy most of the time. It's huge, it's complex, it's always moving. And people see them as two completely different things. And they're not. And I think what we need to do, and what I certainly try to do personally, is to kind of break down that wall. Everybody who's in the ESG investment space should be working themselves out of a job, right? And that's the goal, because ESG investing is pretty much the same as investing. It's just a different way of looking at risk.
Okay, well, let's go there. Let's dive in a little bit more detail there, because for the uninitiated, sustainable or impact investing seems to have so many different flavors, so many different standards. It's kind of hard to get your head around it. So help us understand, well, what's the landscape here? What are we talking about?
Yeah, it's important to level set. Hey, the responsible investment space is huge. Yeah, it's, we put out, one of my organizations put out a report 3 years ago, 2.5 years ago, that the overall assets in responsible investment were about 30 trillion globally. This year, we're coming up with a new report. It's probably going to be around 40 trillion, which is large. Now, you can debate what constitutes ESG or responsible investment, but just think of that as the big umbrella. Now, under that, you've got all kinds of different flavors, right? And impact investment is one of those. So on one side of the spectrum, you've got asset managers, pension funds, sovereign wealth funds, and their goal really is to do no harm, right? An exclusionary approach where my pension fund wants to ensure that they're not investing in tobacco or firearms, right? The other end of the spectrum, which is usually smaller investors or individual investors, family offices, venture, angel, that's the impact world, and where they're looking at actually making a positive impact with their investments. Somewhere in between is this whole idea of thematic investment, right? So you'll see all kinds of new venture funds popping up all over the place these days in ESG, but they always specialize in certain themes. So you have one looking at just climate change, or one looking at gender, or one looking at inequality, right? So because it's easier for people to get their heads around. However, I hope we'll talk about at some point in time today, impact is very, very different. Huge space. The impact investing world is, again, depending on how you quantify it, it's probably 1 to 2 trillion a year at the moment, whereas the larger market is 30 to 40.
Okay.
Does that make sense?
Yeah, absolutely. Sorry, there was a slight delay on the line there, but I'll come back to that in a second. But something just reminded me as you were talking when we had our breakfast, whenever that was, I think it was last February or March, in London, and you said, you made this remark, I had it in my notes, that investors will save the world in spite of themselves. So could I just challenge you on that, please? Tell me again. Yeah. What do you mean by that?
That's a borrowed phrase from a colleague of mine. There's a funny, well, I'm not sure how funny, but there's a story behind this. So I was in at COP20 in Lima in 2014, I think, 14, where the world gets together and we talk climate policy and climate investment and things like that. And one of my friends is the CEO of the World Business Council on Sustainable Development. He got up and he said the strangest thing. He was like, and accountants will save the world when it comes to climate change and environment. And I thought, God, that was such a strange thing to say, because what he meant was what we need in the world is more standards, right? We need a gap accounting principles for sustainability, which is never going to happen for all sorts of reasons. And we can go into that if you like, but it's also not what we need. What you get with more standards and frameworks is really more accountants. What you really need is the investment community. The idea, what he was saying was, if there's standards, if there's frameworks, accountants will be able to draw in the investors to be able to make substantive change in the world. And I don't really think that's right. I think you need to make sure that investors can understand the systemic risks that ESG presents to portfolios, to companies, to investments, to strategies, and so on. In order, if you can break down that fourth wall, that green fourth wall, then you can make change. So again, I don't see any difference between systemic risk and ESG. And once you get investors past that threshold, then profitability and risk is still what investors are chasing. So I believe that they can move the needle significantly. And we're not just talking about individual investors, it's all the way up to foreign direct investment by governments. If you can imbue these different types of investments with ESG criteria and sustainable criteria, you are reducing the risk of these funds. And they are one and the same. And so I think eventually investors will succeed here in spite of ourselves.
Okay. So you wear a number of hats, with SIF, you're chair of that, and TCR. When you get up in the morning, what is, what's your personal mission? What in terms of how you drive yourself and your teams to achieve the everything that you've just been speaking about? What are these practical day-to-day steps that can be taken, and how fast are people's attitudes changing towards sustainable investing? And in particular, what you've just said 10 minutes or so ago about the fact that you should be doing yourself out of a job. Sustainable investing is really just investing. So talk me through the process in your mind every morning.
Yeah. I guess there's a common thread that goes through everything, whether it's any of the foundations or NGOs or for-profit companies or funds or individuals. And it's a theme that'll come up over and over and over again. It's this whole idea that outcomes that you're looking for in investment is different than impacts. So I was even on a call less than an hour ago and talking to a group of indigenous chiefs about a very sizable and a very interesting fund in North America. And those funds are for community resilience, right? And so they've been granted a very large fund for community resilience, and we're looking at how to best plan for how those funds will be spent. And immediately the conversation goes, oh, I've got this project, I want this, I want that. And this is what we all do as investors. We always look at, oh, where's the shiny objects, right? And that's always the wrong way to go with ESG. What you should do instead is you should be looking at the outcomes that you want to achieve. In this case, it's community resilience for indigenous populations, but for an individual investor, you might be saying, oh, I really want to make a dent on climate change, or I really want to make a dent in inequality, or SDG number 5, I really want to invest in female-led companies and female CEOs. All of these things, those are all great. But to achieve those sustainable goals, you need to focus on individual impacts that will get you to that outcome, right? So there's always this confusion between the outcome and the set of impacts that will get you there. That's first. Secondly, is that to achieve that outcome, it's almost never one impact, right? If you want to make a dent, say, in climate change, well, there are thousands of impacts that have to be addressed. Everything from, energy to equality to human rights, you name it. And if not to say they have to invest in all of those areas, but you need to know that they're there, and you need to know what risks they represent. So if you're a fund, say, that is interested in, say, climate change, and you don't have somebody in your fund that has an eye on things like human rights in supply chain, or renewable energy, even if you don't invest in renewable energies, then you've got a massive risk sitting there. So no matter how great the rest of your portfolio is, these things can bring you down. So the idea, and so I think that's the thread that goes through all of the different things that I do, is that focus on the outcomes, backfill with the impacts that actually matter, and then base your investment philosophy on that. And it really doesn't, then you have to decide, well, what kind of investor are you, right? Are you an impact investor that wants change, or are you a larger investor or you want to take a page out of the, say, pension fund that says, no, I just want to make sure that my investments aren't hurting anybody.
Okay, good. Thank you so much for that. So actually, that brings me around to the question that I wanted to get to, because we are, after all, a collective of individuals within Forum. So the individual responsibility that we should take. How do we, without being too general about it in terms of taking on our responsibilities in life, et cetera, but how does the Forum member, how is he or she going to include purpose, if you like, in their everyday work, in their everyday investment? These kind of small steps that presumably help change the climate of investment.
Yeah.
Practical steps.
Well,
What are the practical steps we should be looking for?
yeah, and of course, I think that's, from a personal standpoint, I think we all should be doing that, right? A life without purpose, right? But it harks back to what I was just talking about, right? Is choosing the things that are important to you, but choosing the outcomes that you want to see, and then understanding your role within that. So if your role as an individual investor and there's certain outcomes that you want to see, well, then seek out the different types of impacts that will get you there. For instance, gender equality. So one of the projects that we were working on recently was all about gender equality, finding the best and the brightest in 11 emerging markets for female-led innovations, and connecting them with different types of impact investors from all over the world. And with those impact investors, it really depends on how big they are, right? You've got everybody from, they want to put $10,000 into a company taken from their RSP or something, all the way to, rolling something up in a EIS fund or something. So how they want to engage is going to depend on what their contribution to that outcome is. So again, lining up all of the impacts that you think will get you there, and then at least having an eye on the impacts that can sideline you in your own investment, and just taking a very methodical approach to being able to see what the outcome of your investment will be. And I think that's where to start, especially for impact investors. Once you get up in the chain and you're dealing with asset management and so on, then it's a little bit different. The connection between impacts and actual outcomes is a little harder to define, and that's why you see standards and frameworks at that end of the market and not so many on the impact side.
So, and how optimistic are you, Michael, that actually, as an older generation like myself, that coming to all of this a bit too late in life, the younger generations, the millennials, the younger generations, are you pretty confident? Are you pretty excited about the fact that as a generation, just they take these issues much more seriously than perhaps we did 30 years ago?
Yeah.
Okay.
Yeah. I think the fourth wall is much more translucent today than it was in your day or my day. When I first started out on this 20 odd years ago, you would walk into a fund, or I got my start in the carbon trading side, and it was right. There was no sense of that ESG risks were actually risks. They were things that you needed to do for PR purposes. And now, whether you know it or not, you're already in the ESG game, right? Your pension funds, your savings, all of that, even your taxes. The FDI that the UK and other countries put together is held together through ESG regulation. So not a dollar goes out of many countries around the world in FDI without having some form of ESG considerations tied to it. So it's like I was saying, the title of this talk was really, is it a hype cycle, or is it megatrend? And sure, it's both. ESG investing is definitely the largest trend at the moment in global investment. Is it hype? Yeah, absolutely. You ever watch The Life of Brian when they're taking Brian down from the cross and they go, which one is Brian? And everybody says, I'm Brian, I'm Brian. One guy says, I'm Brian, and so is my wife, right? It's like, that's like the ESG fund market right now. Everybody's an ESG fund all of a sudden. And so sure, there's a lot of hype involved too. But I would say it's kind of neither of those things either. It's an inevitability, right? Climate change will affect us all. Water scarcity will affect your Coca-Cola plant, right? Inequality will affect your supply chain, inevitably. And whether we label it with ESG or whether we label it with risk, it really doesn't matter. All that matters is that these risks are actually taken into account. So I think it's an inevitability, and we're just sort of cycling closer and closer and closer to that day where ESG investing and regular investing in business is just one thing.
Okay, thank you. We're very much into time for questions. So if you have questions, please put them in the sidebar or raise your hand and we'll come to you. I can see Daniel Carici. I'll come to you in 1 second, Daniel, because I just wanted to actually ask Michael one more question, because climate change, of course, is, climate finance is everywhere now, and it's what we hear about, even if we just read the headlines and don't read the detail. And then you and I were talking yesterday, and you said that impact investment on climate change was like bringing a knife to a gunfight, which I thought was a good phrase that could be used elsewhere as well. So just talk us a little bit about that, and then we'll come to Daniel and any other questions that come in. So,
yeah, that was
a gunfight.
Yeah, that was from an article I wrote like 2007 or 8 or something in Green Biz or something. And what I meant then was that climate change, if you want to move the needle on climate change, if that's the outcome that you're looking for, you won't be able to get there through investment in point solutions, right? That eventually government, and the pension fund community, asset management community has to step in, right? It can't be done through sort of venture capital. And there's this idea of this guy named Duncan Austin a few years ago coined this term called green wishing. And it was, it's that investing at a very small stage in point solutions for, say, something as complex and as huge as climate change won't get you to the end result, right? It requires the entire responsible investment community, including the impact investors, to really move the needle. And so bringing a knife to a gunfight, that's what that idea is all about. Again, it's that impacts versus outcomes. And when you're an investor, especially in the impact world, you need to be very clear about what impact you're actually going to achieve. And there are some amazing impacts there, but true moving the needle on something as huge as climate change requires huge investments in infrastructure, right? And it's a sea change in public opinion, which really has already occurred in the past couple of years. And so that's what that piece is really about.
Okay, good, thank you. So Daniel, I'm going to ask you to unmute and ask your question, please.
Thank you. Hi, Simon. Hello. Hello, Michael. As a former partner of Deloitte, I was very impressed with the statement that accountants will save the world. I was never aware of this, but when I listen to you, I'm starting to believe it. My question is simply, you cannot manage anything that you cannot measure with some degree of precision. How far are we in the world in giving ourselves the standards to agree on what the real returns are, given all the government incentives and everything that we're seeing flying around?
Yeah. So that's a really good question. And well, you said something in there that was interesting, right? Is we in the standards to ensure the returns, right? That's not how the flow of information works. It's not about guaranteeing returns and so on. The reason standards and frameworks exist in the world is so then you can have a like for like way of comparing companies. So you can benchmark them and say this one's good and this one's bad, right? The problem with that is that this is voluntary disclosure. right? So GRI or CDP or any of these types of TCFD, these are voluntary disclosures that companies need to make. And that information is inaccurate at best, and sometimes willfully inaccurate. However, number one, it's better than nothing. Number two, it is slowly being regulated. So if you look across the EU, Canada, someplace in Latin America, here in the UK, very, very difficult to be putting inaccurate information into your climate disclosures or your ESG disclosures. And so then it's up to the investor, once they're confident that they have good data, which is a whole other issue, then you get to the point where the investor has to make a determination of, well, is this data, what risk does this represent? So I would say that we are nearing the bend, I would say, on the data that you can get out of standards, frameworks, AI, all kinds of different data collection. Deloitte is actually a front runner in this area, even though they're an accounting firm, to be able to get good information to investors to make the right decisions. Now, that's not necessarily going to be a determination on whether they make the right decision. It's just that they've got enough information to do it. And we're getting very close to that part, but we're not there yet.
So we have time for one more question. Vijay in New York, lovely to see you there, Vijay. Can you?
Hi, Simon, and thank you, Michael. Just curious to hear your thoughts on, when folks talk about ESG, it seems like the first instance they talk about climate change, but in relation to E, S, and G, where do you think we are on the spectrum, or in terms of innings of baseball games, on each of those three letters? And is it different?
It's impossible to say, right? I mean, again, ESG, I don't like the term that much, to be honest with you, because it assumes that these are three separate things, and they're kind of not, right? Mm-hmm. Can you address systemic, in terms of systemic risk of, let's say, a fund, can you look at climate change, which, it's probably in the E, without looking at, equality, human rights, human migration? Can you look? You can't. They're all intertwined. They're not always separate things. Yep. However, I think we're further along in the E, because there's a lot of environmental regulation that's been around for decades. The sources of data are regulated and so on. So there's a lot of data out there for investors. The social, same as governance. I'd say governance is probably the least reported on, but the quality of that reporting for investors in governance is good, right? Because governance is also a part of GAP, of the accounting world for some time. Mm-hmm. It's the S, that's the hard part, the social aspect of ESG, because that's the most general, right? There's few standards. There are thousands of different impacts that you need to worry about in the social arena. And so it's really, really difficult, I think, a lot of time for investors to get their heads around, okay, well, I understand how much energy this building is using. Great, that's sort of the environmental side. Governance side, okay, we've got that side covered in terms of, who owns the building and the reporting relationships and so on. But and how that data gets reported out. But the social, what happens to the employees in the building, well, then that's much, much more subjective. Now that can be a risk for investors, right? Because there's a lot less certainty about what that should be. But that's also an opportunity, right? To explore different areas. One of the organizations that I used to run was the Natural Capital Coalition, or from the board side. And now they've merged with the Social Capital Coalition. And so there's a lot of different organizations around the world looking at seeing if they can create a protocol in order to understand, or at least step investors through how to think about social issues within their investments. And I think that's going to be the closest we're going to get for some time before moving into like a full for social. So the S is furthest behind, but probably represents the most opportunity.
Thank you.
Thanks, Vijay. Good to see you. Michael, thank you so much. Thank you for that. I remind everybody that come and join us in Bermuda, in the Bahamas, excuse me, in November, and also on Tuesday of next week, Tuesday morning, we have Hui Hua Lim speaking to us at 9 o'clock GMT, 10 o'clock Central European time. And Hui Hua has written a really very interesting book. I must say, I'm pretty much all the way through it now on politics. It's really very, very interesting about world politics. And she comes with great credit. She's a huge supporter of Forum. And she was the first ever female cabinet minister of Lee Kuan Yew. So she's a super brain. So please tune in on Tuesday morning. And thank you so much. And thank you to Anthony for joining us as well today. Okay, thank you, Michael. Bye-bye. Cheerio. Cheerio.